get started? Okay. So our agenda for today, we're going to have some welcomes, which we've already started, and some introductions. I want to do a little administrivia, just the housekeeping. I want to give you an overview of the 3 sessions that we are going to have together, and then we'll dive right into the content for session number 1, which is today, obviously. And we're going to do an overview of bookkeeping and record keeping. So I want to thank the Sustainable Food Center and NCAT National Center for Appropriate Technology for sponsoring this workshop. And I think that Hallie wants to say something of welcome to you all also. So I'm going to turn it over to Hallie for a few moments. I think if you're there. Did we lose Hallie? I think we lost Hallie.
I don't see her.
I don't see her anymore either. Well, do you want to welcome folks?
Sure, I can welcome everybody. So everybody can hear me okay?
Yes.
Okay, good. So my name is Kara Kroger, and I'm a Sustainable Ag Specialist with the National Center for Appropriate Technology. And we are a partner on a specialty crop block grant with the Sustainable Food Center. They received the grant and they have collaborated with us and food shed investors to help give wholesale support to farmers. And so one of the pieces of becoming more wholesale ready is to get your books in order. And we know that a lot of people really struggle with this. It's hard to keep up when you're working so hard out in the field. So we're hoping that today Julia can give you all some information that helps you get a little bit more organized and, start from the basics, really. So we're very excited to have Julia. Julia has been helping people across the nation with this type of work for a long time. And if you haven't ever visited her website, juliashanks.com, I highly recommend you do, because she offers a lot of other resources that you could use after this workshop. So without further ado, I'm going to go ahead and turn it over to you, Julia. We can talk a little bit more about the specialty crop block grant when Haley comes back on, maybe at a break.
Okay, sounds great. Excellent. Okay. Thank you. And welcome to Greg and Heidi, who have just arrived. So I think Kara gave a pretty good overview of who I am. My name is Julia Shanks, and I'm a recovering chef. And one of the reasons why I like to share with folks that I am a chef is that I'm not a farmer. I aspire to farm and garden, but I've worked as an entrepreneur, working in restaurant kitchens and having my own business as a caterer. So I understand the struggles of entrepreneurship, and I understand the struggles of working on your feet for long hours, lifting heavy things in a physically hostile environment. The kitchen is hot, you're burning things, you're burning yourself, you're cutting yourself. So I recognize the challenges that you face as farmers. I'm also the author of a book called The Farmer's Office, and I speak like this. I am also a QuickBooks Certified Pro Advisor, which really doesn't mean a whole hill of beans, but it does sound good. So I'm going to just say that it's there. And I'm also, I have a website. Kara mentioned juliashanks.com. I would also encourage you to go to thefarmersoffice.com, which is a video version of my book. So it goes through, how to set up your QuickBooks and how to do financial analysis and calculate your cost of production in video format. So I invite you to check that out as well. And I'd love to know who all of you are. So I'm going to go around the room, and I'm just going to sort of go in random order according to my list, because everybody's little face keeps moving around, so I'm not going to be able to keep track. But if you can just say who you are, name of your farm, where you are, what do you do, and if you want to share a hobby or passion outside of work. I will say that my passion outside of work is gardening and kayaking, and I just moved to a 5-minute walk from the ocean. So I am loving my low tide beach walks. And Rebecca, I don't think is here. So Mark. Do you want to say hello, Mark? Okay, I guess we'll skip Mark. Heidi, do you want to say hello?
Sure thing. Thanks so much. My name's Heidi. I currently work at a nonprofit farm here in town, and I'm working on starting my own farm, which is
Cool.
super exciting. Let's see, the other question is your hobby or passion outside of work. I love to fish.
Nice. What, freshwater, saltwater?
All of the above. I went saltwater fishing this weekend, and I'm with you on the ocean. It just does my heart good.
Oh, nice. Awesome. I'm glad you're here. Thank you. Erin.
So I'm Erin Kimbrough. I'm with Growing on Faith Farm. So my husband and I started that back in about 2014, thanks to a Texas Department of Ag Young Farmer grant. So our passion, and John's a Marine Corps veteran, really is teaching veterans and first responders about production and agriculture, which is what I do professionally for AgriLife Extension, but also what I do for a farm as a farm or ranch, and kind of for fun. So kind of all wrapped in together. So works out pretty good.
Nice. Nice. Well, glad you're here. John.
Hey, I'm John Rui. I've got a farm with two other guys out in Lockhart. We're Growtopia Farms. We just got started up in 2020, so pretty fresh, but things have been going smoothly enough. And hobby. Also love kayaking, swimming. I've got two good pups. Try and get them out as much as possible and camp and swim.
Nice. Awesome. Thank you. Glad you're here. Frankie. Oh, there you are.
Yeah, so I'm Frankie Bain. I have a farm in Wimberley, Texas, also kind of a new venture started in the fall of 2019. I also work for the Texas Organic Farmers and Gardeners Association and sit on the board of the Central Texas Farmers Co-op. So involved a little bit in all of the bookkeeping of all of those different entities. So
excellent.
Excited to learn.
I was going to say you're the expert here.
No, not at all. That's why I'm here.
Awesome.
And a hobby is, man, I feel like this has been played out already, but the first thing that came to my mind, especially this time of year, is like just being a real river rat and going swimming every day and taking the canoe out.
Nice.
Yeah.
Nothing wrong with that. That sounds awesome. Greg.
Hi, my name is Greg Mast, and I am in the startup phase of my farm, Mast Family Farms. And so I've got some property that I'm borrowing in Elgin and trying to get my business set up the right way from the beginning instead of trying to kind of fix problems that I bake into the pie after the fact. Also work full-time in a kind of like farm-ish job at the food bank. Passion, hobby or passion outside of work. I have kids instead of hobbies. So I don't know, washing dishes, maybe?
Right.
Yeah.
Well, if you could get zen about that and really passionate about washing dishes.
Oh, I'm passionate about my kids, but I wouldn't call it a hobby exactly.
Right. Awesome. Well, thank you. I'm glad you're here. Gretchen. Where is Gretchen? There you are.
Hi. My name is Gretchen O'Neill. I started my floral design business in 2009. And then I started growing flowers in my yard in Bolden Creek. And then in 2015, bought land out in Manor. So the farm is out here. I always get nervous when people are like, what do you do outside of work? Because I feel like it's flowers all the time. I too have a child. So I would say, aside from dishes, cooking meals, 3 times a day, they got to eat.
I know. Is that crazy that I keep wanting to eat?
Like what's for dinner?
Once a week?
That question.
I know.
I do like hiking and also dancing, ecstatic dance in Austin. If anybody's into that, I highly recommend it. It's very good stress release.
Nice. Awesome. That sounds fantastic. Grace, welcome.
Hi.
Hi. I know you just sort of jumped in, but we're just introducing ourselves. So who you are, what you do, and a hobby or passion outside of work. And kids can be a passion. Taking care
That's
of them
legit?
counts. That's legit.
Okay. I'm a photographer, and I have recently graduated from farm school. So I am looking for a farm to purchase. And that's what I'm doing here.
Cool.
And I do have a child, but he's a grown man. So, you know, he's off doing his thing.
Nice. That's awesome. Well, congratulations on getting him launched. I know that's a job. Catherine, you are not on my list of attendees, so I'm not quite sure who you are or where you come from, but I'm glad you're here.
Oh no, I got the email and signed up, so I'm excited to be here.
Cool. No, I just, I don't know what your question, whatever, does not go on.
So my name is Catherine Tanner. I'm with Hat and Heart Farm in Fredericksburg, Texas, and we are a 51-year-old farm that transitioned to second generation ownership 2.5 years ago. So my partner Bradley and I are the second generation on his family farm.
Oh, awesome.
And I did not grow up in agriculture, although he did. And we started as an LLC and his parents weren't, and we've insured everything and they didn't. And
Whoa.
so we're kind of, and everything, the last 10 years of records was pencil in a ledger that we have stacked on these bookshelves. So I'm really into QuickBooks. I want to be into QuickBooks for our farm. And so it's kind of a big step forward for us.
Nice.
So I'm really happy to be here. Thank you.
Awesome. Well, congratulations on, it's fun to have those relics of yesteryear.
Indeed.
Yeah.
Indeed.
Yeah. I just found my grandmother's old recipe books and all her clippings, and she had a recipe for lamb chops with grapes and roasted bananas.
Oh my goodness. Oh my goodness.
Awful.
I don't know if you can hear that, but I have a tractor driving by me right now. I'm in the barn. That's where we have Wi-Fi.
Got it. No problem.
And our hobby jointly is dancing. We do Texas two-step in most of the dance halls around here. So
nice. And Rebecca is not a farmer, I don't think, but I just wanted to give her a moment to say hello since she's here.
Hey, I am. I'm Rebecca Ginsing with AgriLife Extension, and I'm the evaluator on this project. So later today or tomorrow morning, you will be getting a very, very short questionnaire from me that just helps us to know how we can better help you. And so I would sure appreciate if you would click that link in your email and give us just a bit of information. Thanks.
Oh, thank you. Glad you're here. So just a little bit of administrivia. I think everybody knows how to use Zoom now, so I'm not going to go through the Zoom tutorial. But if you can put your camera on, that's fantastic. If you can keep your microphone off unless you have questions, just generally speaking, I love questions. Don't feel like you need to wait. If you have a question, unmute yourself. I can see all of you, so you can even just raise your hand and I'll see you. So we're going to be meeting obviously today, again, this Thursday and 2 days from now, a week from today on next Tuesday, and then next Thursday and Friday, we're doing one-on-one coaching. So while I would love for all of your questions to be answered over the next 3 sessions, I realize that's not realistic. So the one-on-one coaching is an opportunity to really address your specific needs and questions. I will also be hosting office hours. So if you have a 5-minute question, you don't need a full hour of coaching, I will be sending out a calendar invite for office hours, and I'll do a couple of those over the next few months. So as you get going on your QuickBooks and on your bookkeeping system, there is ongoing support for you. You don't need to get it all in there over the next 2 weeks. So we have 3 sessions. Today, we're going to do an overview of bookkeeping and record keeping in general. On Thursday, we're going to do an overview of QuickBooks. I know about half of you are already in QuickBooks, which is fantastic. And session 3, I'm on the fence about. We can either do more details about QuickBooks, or we can talk about how to get the answers you need. And session 3 will really depend on the questions that I hear from you and what I think will be most valuable for you. So don't be discouraged if one of those doesn't sound right. Let me know, and we'll make sure that you're getting what you all need. All right. Any questions before we get started?
I have a quick question. Sorry, this
Yeah.
is Morgan Emling from Sustainable Food Center.
Oh, hi, Morgan.
So I don't know if Hallie's been in contact with anyone. Her power went out at her
Oh,
house.
no.
So she texted me to let everyone know that little tidbit, and she sent me a whole thing to say, but I think we've done all the intros, and whenever she's able to reconnect, she can pop on and say something. I'm also having issues getting on the Zoom. I called in the meantime, but could anyone who has the link just email it to me, possibly?
Sure. Can you do that, Kara?
I could definitely do that. If you'll shoot me your email in the, oh, wait, you can't.
I can't. My power's on. It's Hallie can't, but I emailed you, Kara.
Oh, you emailed me. Okay, great. I'll email it back. Thank you.
All right. Thank you very much.
Cool. All right. Okay, so today we're going to talk about why bother. We'll go over the 4 rules of bookkeeping. There's probably 27 more, but I'm going to talk about 4 of them. And then we're going to talk about some key accounting concepts that I think will be important as you think about the design of your bookkeeping system. So why bother? Catherine was saying about her family having the stacks of paper and pencil ledgers. So, you know, that it's that's, you know, for filing your taxes maybe. But why bother with bookkeeping? And can you guys hold on one second? Somebody just is making a lot of noise in the background, and I am going to try to get that taken care of. Sorry about that. I just moved my office and trying to figure out the logistics here. So why bother bookkeeping? Reason number 1, let's say you go to the gas station, you fill up your gas tank, you have $20, you sort of shove the receipt in the glove compartment, and you forget about it, you don't record it. And when you go to file your taxes, what's going to happen is that you're not going to have all the reported expenses that you have. Your profit is going to be higher than you think. And as a result, you're going to be paying more in taxes because you have more profit. Taxes are based on profitability. Why bother? Reason number 2. And this actually happened with a client of mine, and he was downloading his transactions from Square into his online QuickBooks, and he was downloading his transactions from his bank into QuickBooks, and he accidentally double counted all of his sales. And so the effect of improper bookkeeping is that his income was overstated by $3,000, and overstated income, overstated profit, and that's going to increase your taxes. Effect number 2, which I think is really more important and why we're here today, is that if your bookkeeping system isn't accurate, then you don't really have an understanding of your cost of production and the cost of doing business and what improvements you need to be making. So how does that affect analysis? If you think about, you know, what the actual was, let's say the actual was $50,000 in revenue, their cost of production was $25,000, their gross profit was 50%. If you've double counted a portion of your revenue and your cost of production, you know, you still recorded your cost of production accurately, but now you're showing a gross profit of $28,000 instead of $25,000. So it looks like you're more profitable than you are. So how do you think that, how would that impact your decision making? And does anybody want to offer how that might impact your decision making if you thought you were more profitable than you were?
Well, you might try and grow something that wasn't profitable to grow, or take on more debt than you can actually carry?
Yep. Yep. Exactly. So, you're making decisions on faulty information, and you're not making the best decision for your business because you don't have the best information. So you all have questions about your business, and thank you all for filling out your surveys. Some of the questions that you all had were, how do I have a better handle on my cash flow and my projections? How do I understand which enterprise is most profitable? Where's the money going? What do I need to change to be more profitable? And what is my cost of production? So you all have, these are great questions to have about your business, and the answers are there. It's just, where are they in your numbers, and where are they in your bookkeeping system? So what information do you need to be tracking? So if, for example, you want to know your cost of production, you'll need to know, what did you sell for the different enterprises? If you want to know what it's going to take to be more profitable, you need to understand the nature of your expenses, which expenses are fixed, which expenses are variable, and how will they change? If you want to know the cost of production, you're going to need to know which costs are specific to production versus which costs are general overhead. If you want to decide, whether I should go to this market or that market, you're going to want to know what are your specific expenses to one market or the other. So lots of information that you can be tracking in your bookkeeping. And we want to make sure that we're setting up your system so that you can track these things. Any questions so far? So all this information is going to come from your record keeping system. So there's different types of record keeping. There's the financial record keeping, and that's going to be, in terms of your sales, expenses, it's going to be cash flow, it's going to be investments. And there's also your production record keeping, your harvest yields, pick records, time and labor. How many of you have systems for production, record keeping systems for production? So Gretchen does. What kind of system do you have, Gretchen?
We have a very sophisticated system of pen and paper.
I couldn't tell where that was going. We have a very sophisticated.
Very sophisticated. No, we have different binders, and we just record. We record everything that we've been harvesting, and then it gets sent to my admin person, who puts it into an actual file, and it lives on the Google Drive.
Excellent.
And that's pretty much it.
Cool. And that's great because, part of knowing your cost of production is knowing what your yields are. So, it's not really separated, production and financial. They all kind of link together. Erin, do you have what you looked like you had some production record keeping systems?
I do. So I use an app. It's called Livestock. We do grass-fed beef. So I really enjoy it because we do holistic management, rotational grazing type system. So it helps me manage all of my pastures and rotations, all of our tasks, and then our birth flow of our animals. And so we have a pretty good, and it's free, which is always the best.
Yes.
But I think our problem with that is that it doesn't talk to the financial systems. So, right. And I love the operation. So I'll, write down everything we've done with a calf for the day, but then putting my receipt in QuickBooks. So finding a system that helps us put them together would be helpful. And I think if QuickBooks was something I understood better, it'd be easier.
And sometimes,
because I don't like it. It doesn't make sense to me, and then I'm like, I don't want to do it.
Yeah. No, and it's hard. And part of it's just knowing what QuickBooks can do. So if you know that there's a place for it to go, that can really help. But QuickBooks can be frustrating for sure. But hopefully we'll sort of unfrustrate you a little bit on Thursday. And Kara was asking what the name of the app is. Maybe type it into the chat window so everybody can see. So, we have the different types of record keeping systems, and how we track matters. So we want to track the date, the dollar value, and the purpose. And, we can track in QuickBooks, which we're going to talk about, Excel, which I know a lot of you are using Google Sheets, which is fantastic. A ledger is fine. I don't want to disparage anybody's systems, but it's certainly not the most ideal. But part of the reason, we want to track the date, dollar value, and purpose is that's going to be what's going to start to give us some meaning and some organization around all of our transactions. It's not just a pile of receipts, but it's a purpose. And each transaction has a value to the farm, to the business, and we want to make sure we're keeping that organized. And the truth is that all systems take time. And I think a lot of times people go to Excel or Google Sheets because it seems easier than QuickBooks. But when it comes time to extract the information that you need, a system like QuickBooks is going to be more robust. So you can sort of take, you can put in your time either on the data entry side, or you can put in the time on the analysis side of things. So they all take time. It's just a matter of where you're going to put it in. Any questions? Everybody's good? Okay. So 4 rules of bookkeeping. Rule number 1, garbage in, garbage out. Who's heard that expression before? What does that mean, Greg?
Well, your computer is not intelligent. It just takes what you give it and reprocesses it. So,
yeah, so how does that apply to your business? So when garbage in, garbage out, your vegetables?
Yeah.
Yeah.
Like if you don't give your systems good information, they're not going to give you good information back out.
Yep, exactly. And it's true with farming. And, if you give your animals crappy feed, you're going to have crappy meat. And if you have crappy soil, you're going to have crappy tomatoes. And if you have crappy data entry, you're going to have crappy reports. So if you're just sort of shoving all your inputs into QuickBooks or into Excel, if you don't take time and care the way you take time and care with your vegetables, your flowers, and your meats, you're not going to get the information that you need to answer all those questions that you all have about your business. So the garbage in, or hopefully pristine product in, pristine input, those are going to be the transactions, the things that go on in your business, whether it's, a credit card charge, or, you purchased something at the hardware store, you paid your employees, or you went to the market and you sold things. All of these little things, all of these transactions are going to be the input that we're going to put into our bookkeeping system. And the output that we're going to get is going to be the profit and loss. It's also known as the income statement. I've asked people smarter than me the difference between profit and loss and income statement, and they're exactly the same. So if I use one or the other, it's, they're synonyms as far as I can tell. So, we're looking to get out of our bookkeeping system an overview of our profitability and our operations. We're not going to talk about it so much, and I realize that the balance sheet is, a 10-week session on its own. But, the other output that we can get is a balance sheet, which is an overview of what we have and how we got it. We also want to know our cash flow. How is cash moving in and out of our business? And all of this information can come from a well-kept, well-maintained record-keeping system. And the output is a summary of all the transactions that convey information. In terms of QuickBooks, I sort of talk generally about the financial statements as the output, but other outputs that you can get, and some of the things that we can get from QuickBooks, one of my favorite reports is a summary of our sales by product or by customer. So, if you're doing if you have a well-kept bookkeeping system, you can see exactly how many pounds of tomatoes, how many bunches of flowers, how many pounds of meat or gallons of milk you've sold, and you can get that information out of QuickBooks, which can be really helpful. You can also be tracking outstanding invoices or bills or credit card charges. So lots of information that you can be tracking in your bookkeeping system. And a good bookkeeping system is going to manage the inputs for you and provide the output. So QuickBooks is, essentially a jacked up database that gives you the opportunity to sort and slice and dice the information in different ways to give you the information that you need about your business. Whew. Rule number 1 was a big one, and basically just, take care with the data to get the information that you need. Rule number 2 is that you're the boss. And I think this is a hard one for people to internalize, because you're going to get a lot of advice from a lot of people for how to keep your books. And does anybody work with an accountant to file taxes at the end of the year? Yep. So a lot of you work with accountants, and your accountant is going to try to be helpful, and they're going to tell you how they think you should set up your books. But your accountant is thinking about tax filing, and they're not thinking about what's going to be the most helpful information. And when you set up your QuickBooks, QuickBooks is going to try to be helpful and try to help you organize in what they think is the most important organizational structure. And that's not necessarily true. People at QuickBooks are not farmers. They don't get it. And if they were farmers, they might be farmers in the Northeast, and everybody knows that farmers in the Northeast know nothing. So, so you're the boss, and, obviously within, solid bookkeeping principles, set up your bookkeeping system in a way that works for you and is going to give the information that you need. And don't be bullied by your bookkeeper or QuickBooks into doing things that don't make sense for you. Rule number 3 is to be consistent. And I say consistent in several ways. One is you want to be consistent in how often you enter things. You want to enter data into your bookkeeping system, once a week, several times a week, consistently. And you want to be consistent in how you enter things in, so that if you're entering in a transaction, you purchase seeds, you want to be writing seeds every time you enter in that transaction, and not seeds one day and field supplies another day. That you want to be consistent in how you enter in your transactions. And if you're consistently working on your bookkeeping system, it's going to be a lot easier to be consistent in how you enter things in, because you're going to remember how you did things 2 days ago, remembering how you did things 2 weeks ago, not happening. And I'm right there with you. I'll admit that I sometimes forget. And rule number 4 about bookkeeping is to focus on managerial decisions. And I alluded to this earlier when I talked about, you're the boss. Bookkeeping for taxes is very different than bookkeeping for managerial decisions. And I know a few of you mentioned that you're LLCs, but how many of you filed a Schedule F tax return? So a few of you file Schedule F, and the Schedule F sort of says, these are the categories that we want you to enter in. And so that's, a lot of times people say, oh, well, this is what I need to do for my taxes. This is going to be how I want to set up my bookkeeping system. But the Schedule F doesn't help you make business decisions the way they organize things. It's fine for the government. It's not great for you. And as you set up your bookkeeping system, I encourage you to focus on the managerial decisions, the questions that you want answered, and the adjustments that you need to make at tax time are really straightforward. And if your tax accountant can't make those adjustments, you may need to reconsider your tax accountant. So if you want good outputs, if you want good reports, you'll need a good system for tracking the inputs. I'm actually curious. So about half of you said that you're using Google Sheets. For those of you who are using Google Sheets, is it your intention to switch to QuickBooks? And I'm gonna, Greg or Erin.
So our CPA set up QuickBooks for us. So he put it on the categories and everything, and just we have access to it. So and it's connected to our farm accounts and that kind of thing. But the Google Sheets I use to still track that. And whenever you teach us, I'm sure it'll be easier. I can just go in there and tell it what I don't know what it wants. It asks me stuff. I'm just like, I don't know. I'll tell you at the end of the year, which I know is terrible. I'll just take a week off of work and we'll figure it out. But no, so I would just really rather be more consistent and figuring all of that out and putting it in as we go. And that's the nice thing. We have the app for QuickBooks, so we can do it on the go instead of having to stop and take a day or half a day to manage books. So
good. Okay, great. This is helpful. And Greg said that your goal is to switch to QuickBooks as well. Is Heidi here? Yes, Heidi, are you tending to switch to QuickBooks?
Yes, I think that's the goal.
Okay.
I mean, I'm kind of on the same page. Hopefully I'll know more after this conversation.
Okay, great. Well, I wanted to say, we're going to start talking about, the structure of your bookkeeping system, but I want to acknowledge that not everybody's in QuickBooks yet. And if there are folks that are going to stick with their Google Sheets, I want to respect that the principles that we're going to be talking about now will apply to Google Sheets as well as QuickBooks. Questions? Anybody have questions? So far, it's pretty straightforward stuff. Anything that's surprising people so far, or sort of like, ooh, wasn't expecting that? Okay. So I want to go over a few key concepts that are going to help inform how you set up your bookkeeping system and how you think about it. And the first concept I want to talk about is cash and accrual accounting. And I'm not asking who understands it. I'm just curious who's heard of cash and accrual accounting. So Gretchen, Kara, Frankie. Oh, so most of you, John, do you, would you venture to say you could explain it, or you know the difference, or you're just sort of like, I've heard of it? If you're speaking, you're muted.
No, I cannot explain it. I used to know what it was, and this is kind of ringing a bell reading this.
Right. Gretchen?
So we mainly use an accrual basis because I have the farm, but then I also have the design business and we do weddings and events. So basically we book a wedding a year in advance, but we take a deposit for it at the time of booking, but the income for that event is not counted as income until the month that it's actually happening.
Exactly. And that's how I learned about it when I had my catering business, is that I'd have the cash coming into my business. Somebody would give me a $500 deposit or whatever for a catering business, for a catering job, but I don't earn it for 2 to 3 months. And, I may get the deposit in March and the event is in June, and in June I have all of my expenses. So if I'm trying to understand the profitability of a event, it's like, okay, well, I have revenue over here and I've got my expenses over there, over there, and how do we sort of get them lined up so that we can see the profitability? And the same is true in farming, that, you're going to have your expenses over here and you're going to have your revenue over here. And how do we line it up so that you can understand the profitability of your business? And the more academic explanation of cash accounting versus accrual accounting is that cash accounting, we record revenue and expenses when the cash is received or the cash is spent. And as such, we have no accounts payable, we have no accounts receivable. So it can go both ways. Gretchen talked about taking deposits for weddings, but if you're selling wholesale, you may not get the cash for an outstanding invoice till 2 months later. So you would record the revenue when you get the paid invoice, as opposed to when you brought the product over. Does that make sense? So I'm going to, and then accrual accounting is you record the revenue when it is earned. So when Gretchen delivers the flowers for the weddings, or when you deliver the produce to a vendor or you deliver produce to the CSA, you record the revenue when it is earned and the expenses when they're incurred, not necessarily when the cash flows. And the goal is that you're matching the expenses and the revenue so that you can better understand the profitability of your business. So I'm just to, because I feel like accrual and cash accounting is one of those brain twist concepts, I just want to go over it a couple of more times just to help clarify it. So let's say you buy seeds and supplies on credit. You've been going to the same farm supply store for 100 years. They know you. They say, don't worry, pay us in 30 days. And you get back to the farm. You sold a few CSA shares. You take the cash in. Then you start planting some radishes, quick growing vegetables. You pay for your seeds and supplies. You start to pay for your labor. And then you deliver your produce. You deliver the CSA to your customers. You deliver some wholesale to a restaurant. And then 30 days after that, you receive your payment for the wholesale. So you can already see that asynchronic flow of cash, that nothing happens in the same period, not even the same month, maybe not even the same year, especially for the livestock farmer, it's really difficult. So in an accrual system, you're going to incur the expense here and you're going to have the cash outflow here. And that period between incurring the expense and having the cash outflow, that's called accounts payable. And that's money that you owe to your vendors. And in QuickBooks, there's a really easy mechanism for tracking accounts payable. And we'll talk about that next time or in 2 times from now. You have a cash inflow when you sell your CSA shares or you receive payment from your wholesale customers, but you earn the revenue when you deliver the produce. The time between when you deliver the produce and you get payment from your wholesale customers, that's called accounts receivable. And you have a debt that's owed to you. And that period between when you sell your CSA share and you deliver the CSA, or you take a deposit for a wedding, for flowers, that's unearned revenue. And that's really important to track because that means you have cash today that you're not going to get tomorrow when you actually do the work. And keeping track of cash you've already received can be just as important to help you manage the cash flow in your head. In cash accounting, we record the expense when the cash flows, and we record the revenue when the cash flows. So in summary, cash accounting is better for tracking and understanding cash flow. Accrual is better for understanding production and work cycles and profitability. And in QuickBooks, what I would recommend is that you set your company, in the company settings, you set it for accrual. Intuitively, we actually think in accrual. And, if you really want to see cash, you can always, there's a little radio button that you can switch over to see a cash basis report. But even though accrual just sounds like this mind twist, like, holy smokes, I can't get my brain around this. You're actually intuitively thinking about that. And I think Gretchen's example with the flowers is a classic example. You know that you haven't earned the money. It's just having the mechanism in QuickBooks or in your bookkeeping system to track it. So I want to just go over a quick scenario and again, some of the impacts of these decisions. If you receive a CSA payment, let's say in November of 2020, but you don't deliver on the CSA until 2021, you buy production supplies, maybe you've got produce and meat, especially livestock farmers, you might have meat in the freezer from the previous year that you're going to sell in the coming year. And, you might have leftover product this year that you're going to sell in the coming year. So, do you make inventory adjustments? So, I've tried to sort of align everything sort of what, cash accounting, when did the cash flow? Did it happen year 1 or year 2? Did it happen in year 1, year 2, year 3? This accrual accounting is when did the revenue get earned and when did the expenses get incurred? So even though, for example, we have production costs in year 1, we didn't actually have the revenue associated with it until year 2. And we may have had production costs associated with product that we don't sell until year 3. So again, we saw this example early on, having accurate numbers gives you an accurate sense of your business. You're going to have a different sense of your profitability with one method over the other. In this example, an accrual accounting system shows a more profitable business, but that's not necessarily the case. It's just, kind of how these numbers worked out. But, it's important to recognize that you're going to see different things in your reports based on accrual or a cash accounting system. So I may not convince you today that you should do accrual accounting, even though I think that it is better. That said, whatever you decide to do, know what you're doing and be deliberate about it. So as an example, if you say, you know what, Julia, what you said is a bunch of hooey, I'm doing cash accounting, I don't care. If you, for example, create an invoice in QuickBooks and you run a report to see, what's your outstanding accounts receivable, your accounts receivable report is not going to be accurate because it's cash accounting, and QuickBooks doesn't know how to sort of show that to you. So all your reports are going to be distorted if you're running a cash basis. But if you know that that's what's going on, then you can take that into account as you read the reports and do your analysis. So really understand which system you're using and make adjustments, mentally as needed. Any questions about cash and accrual accounting? Greg.
What was the name that you used for the time between selling your CSA shares and delivery of the box?
Unearned revenue.
Unearned revenue. Thank you.
Yep. And like I said, I think that's important to track, especially for cash flow, because, let's say you sell CSA in February and you deliver in July, you're going to be busting hump in July and you already have the cash. So, sometimes there's sort of that mental game of knowing what you have in the bank and how long does it need to last you. So
I'm sorry to interrupt you.
Oh, go ahead.
How is that different from accounts receivable again?
So accounts receivable is if you sell to a vendor and they don't pay right away. So unearned income is when they pay you in advance, and accounts receivable is when they pay you after the fact. And obviously they're both important to track. You want to be tracking accounts receivable because you want to know who owes you money. You want to make sure that you're getting everything that's coming to you, right? So they're both important to track, but for different reasons. Before we get into the second concept, it looks like Hallie is back here. So I wanted to give Hallie a moment just to say hello and welcome. Oh, there she is.
Hi, everyone. Sorry about that. We had some power outages in East Austin, so I had to run over to the SFC office. I was working from home today.
That was fast, though. Good for you.
I live close to work, which is nice. Yes, so my name is Hallie Casey. I work with Sustainable Food Center. I think that Kara told y'all a little bit about the project kind of behind this workshop series. But I just wanted to say thank you so much to Julia and to all of the farmers on the call today for joining in. And yeah, I'm just excited to get to learn along with you guys today.
Excellent. Thank you. Well, thank you for organizing all of us. Awesome. Any other questions about cash and accrual? The questions so far have been fantastic. Don't want to discourage.
I did have another question.
Yeah.
Is there a difference? So maybe a fairly specific question to me. I'm anticipating having a pretty short-lived enterprise, maybe 2 years.
Okay.
From start to finish. And I'm wondering if there's an accounting method that would be preferable given the short nature of that enterprise.
Yeah. So, when we talk about accrual versus cash accounting, there's sort of different mechanisms that we can use to sort of, you can sort of see how I'm pushing that $10,000 over, and I'm pushing that $10,000 over here over to the next year. So there's sort of, a mechanism within QuickBooks to make those movements to align the revenue and the expenses within the same time period, so that when you run a report, you can see what was my revenue and what were my expenses. And typically we run reports in 1 year increments, especially for farmers where we have this protracted production cycle, as opposed to, let's say, when I had my catering business, it's like you cook the food on Tuesday, you serve it on Wednesday. If I run a report for 1 month, I've really captured everything quite easily. So farmers typically will run a report for 1 year. And so any adjustments that we make are sort of pushing things into the right year, whether it's, out 1 year or in 1 year. So if you have a 2-year production cycle, you could, in theory, still do cash accounting, but run a report for a 2-year period so that you can have all the revenue and all of the expenses encased in that one report. The challenge is when you run a report for 1 year at a time, you aren't capturing things that are over there or over there. So how do you sort of bring it all together in the same reporting period? Does that make sense? Any other questions before we move on? Erin unmuted her face. I don't even know if you've turned your camera on. I suggest you had a question.
No, I just want to let you know. Are you recording and going to send it out to us?
Mm-hmm. Yeah.
Okay. Yeah, sorry. I have a conflicting meeting here at 3, so I'm going to go ahead and jump off. But if I get finished sooner, I'll jump back on and join you guys again.
Awesome. Great. Enjoy your other meeting.
Oh, yeah. Thank you.
So concept number, Frankie, did you have a question or just waving goodbye?
No, I did sort of have a question, or just wondering, like when I was listening to you talking about the cash versus accrual, I wonder if you've noticed, it makes sense if you're running a CSA perhaps to use the accrual, and do you notice that people who sell mostly at farmers markets or to restaurants who don't do, or if you're doing contract growing, maybe you want to do accrual or things like that, different operations are better suited for different kind of systems?
Yeah, I mean, I would say to your point, not every, there's different ways that accrual accounting impacts bookkeeping. And I would say just as a default, set the company, your QuickBooks company, put the settings at accrual, just these minor little things that get wonky in cash accounting. Now, do you make the year-end adjustments? Do you sort of say, oh, I have inventory left, so I'm going to make an adjustment in QuickBooks? Not necessarily. I talked about sort of the mechanisms to sort of encase your production year into one time period. I worked with an apple orchard, and their production cycle is from April to March. So April, they start pruning their trees, and then they start growing, they have all their expenses. And then by March, they've sold out of their crop, and then they start over again in April. So instead of, making adjustments in December, they just changed their accounting cycle to say, all of our expenses and revenue are going to be encapsulated from April to March. So I'm going to set my accounting year April to March rather than January to December, because that makes more sense for their business. So the principle, I think the key takeaway is, how do we match the revenue with the expenses so that we can see them in the same reporting period? If we run a profit and loss for 2021, or if we run a profit and loss for April, that we're encapsulating what happened in that period. Does that make sense? Gretchen.
So I have a question. So the fall for us is a time where we spend a ton of money on seeds, bulbs, all of that kind of stuff that we're planting in the fall. But all of those crops aren't going to be harvested until the next year.
Right.
And over the course of several months.
Right.
So how would you, in order to get a clear picture,
yep,
how would you parcel those expenses out?
Yeah, so I mean, we can talk about the mechanics in QuickBooks, but again, you could set your accounting period. So when you run a profit and loss, you can set the date range from November to October instead of January to December, because November to October is going to capture all the expenses for the things that you sell in the coming year.
Mhm.
The other option, and for me, it's just such a brain twist to not think January to December. I'm just, my brain functions January to December. And it was so funny because when I worked with this farmer who had their books April to March, it was like, it was always a little bit discombobulating. The other way to do that is you sort of store the seeds as inventory, as an asset, and then in January you move it off of, and this is a mechanism in QuickBooks that we can talk about, but you record them as inventory, and then January you move them over from inventory to an expense. So you can sort of record the transaction and hold the expense as an asset instead.
So could you just record it as an expense to begin with? Would there be a problem with doing that?
Well, I think the question that Gretchen was asking is that if I have all these expenses in 2020 and all the revenue in 2021, how do I understand my profitability? How do I run the report to capture everything in the same time period? Was that sort of the question that you were having, Gretchen?
Well, I didn't know if it made, we haven't been doing this, but I didn't know if it made sense to record those purchases in the next year.
Right. And that's what's so complicated. And that's where people sort of get themselves in that, brain twist, is that it's like, well, I need to record the cash flow, because if I don't record the cash flow, I'm going to start bouncing checks, but I don't want to record the expense because I still have the seeds and I want to match it with the other year. So it's like, how do you accomplish both?
Mm-hmm.
That you record the cash flow, but it's not an expense until 2021. And that's the goal of accrual accounting, is sort of helping you separate cash versus expense. Because just because you have a cash flow doesn't mean you have an expense. Just because you have an expense doesn't mean you have a cash flow. And another example of that statement is if you have a loan payment, your loan repayment isn't an expense, but it's by all means a cash flow, right? And
so
if you receive,
sorry,
go ahead.
So you're saying recording the seeds as an inventory is basically recording the cash flow.
Right.
Okay, got it.
Yep. So we're sort of separating those two. Great questions. So concept number 2 is that everything has a bucket or a shoebox. And I don't think anybody is as old as me, but people my age used to store all their receipts in shoeboxes. And, you had your shoebox. You're not that old, Catherine. That's your parents. Yes, excellent. But you stored your phone bill in one shoebox, you stored your utility bills in another shoebox, and and the same is true in in our bookkeeping system, that we want to put things in a bucket or a shoebox, and we want to categorize things, and we're going to tag things. So we can tag things as seeds and seedlings, or packaging as operating expenses. We have overhead expenses like insurance or fuel. We might have equipment or infrastructure like a hoop house. So we want to sort of start thinking about, how do we categorize all of these transactions into meaningful buckets or shoeboxes. And when we get into QuickBooks, everything is going to get tagged or assigned to a bucket. And those buckets in QuickBooks are called the chart of accounts. And the chart of accounts is the backbone of QuickBooks. And it sort of defines your buckets, number 1, like how do you categorize things? And number 2, it defines how you're going to see all of your reports. So, really understanding the chart of accounts is what's going to help, ensure that things are properly organized in your bookkeeping system and you're getting the information that you need. So some of the buckets will live on your income statement. Some of the buckets will live on the balance sheet. And the chart of accounts, this structure, if you decide to stick with Google Sheets or Excel, this concept of assigning buckets and categorizing is still going to be true, but obviously you're going to apply it differently. You're creating your structure, your hierarchy of how things will go.
What does COGS stand for?
Chart of accounts, COA? Oh,
No,
COGS, sorry. Yes, COGS, cost of goods sold. So COGS is sort of the traditional accounting acronym, cost of goods sold, but as a farmer, you may want to think of it as cost of production. So, just sort of make that mental note that cost of goods, cost of production is, for you, it's cost of production. So how you organize your buckets shapes the story of your business and shapes how you understand your business. And we'll talk about this in a couple of ways, but I wanted to share with you, an example of, how the same, the same transactions, depending on how you organize them, can, make you feel like you're spinning your wheels and you're getting nowhere in your business. Or you could look at it and say, I'm building equity. So let's say you purchase a greenhouse. If you had $100,000 in revenue, you bought the greenhouse for $15,000, and then your other business expenses were $60,000. If you record the greenhouse as an expense, you're going to show a net profit of $25,000, and you have no assets. You've got no equity in your business. If you record the greenhouse as an asset instead of an expense, now you've got something that's giving the farm value. Your net profit is going to be $40,000 instead of $25,000, and you've got an asset in your business that's worth $15,000. So just by defining whether the greenhouse is an expense or an asset changes how you view the story. And somebody who records the greenhouse as an expense is going to be kind of depressed at the end of the year. And the person who recorded the greenhouse as an asset is going to be like, wow, I did all right.
Wouldn't you pay a lot more in taxes that year?
Well, you're going to not necessarily. Great question. So you pay taxes on your profits. And one of the ways you're still going to record the greenhouse as an expense, but it's going to come in the form of depreciation. So instead of sort of taking the tax write-off in year one, you're going to take the tax write-off over, let's say, 5 years and $3,000 per year. So, but this also goes back to the question, what are you doing for taxes? What are you doing for profitability or for managerial decisions? So from a tax perspective, maybe that's what you want to do. But if you want to understand your business, you might want to look at it differently. And, I don't have sort of planned comments today about depreciation, but depreciation is basically saying that that greenhouse is going to give my business value for 5 years. So instead of recording the value that it gives me in 1 year, the year that I buy it, I'm going to say I have $3,000 of expenses over 5 years. And that sort of smooths out your profit and loss statement because you've spread out the expense over 5 years instead of 1 year. You can still get that tax deduction, but you sort of tell a different story about your business by recording it as an asset instead. Does that make sense? Did I lose you, Greg? Or are you good with that?
No, I understand where you're coming from. I'm thinking about my own particular instance of like, well, I don't have time to depreciate anything, and also I had one of the farms that I worked on earlier, many years ago, they made a very considerable amount of upfront infrastructure investments and then depreciated that stuff out. But they, in the process of doing that, they kind of had the opposite effect. They viewed themselves as being more profitable than they actually were. So once all of that stuff was in fact needing to be replaced, their business couldn't afford to replace those assets, and so they went under.
Yep. So
I have, like, in my mind, sometimes depreciation, I'm like, oh.
Yeah. But, to your point is, what's the story it's telling, and are you, how do you interpret that? So, to that end, I mean, and depreciation could be another 10-week session. We're going to do the balance sheet for 10 weeks. Then we're going to talk about depreciation for 10 weeks after that. This is a big conversation. And to your point, how do you read depreciation on your income statement is also another question. And I view depreciation as a way to sort of recognize the value that your assets give you over time. And it can be a reminder, this is how much you need to save, because I'm going to have to replace this equipment in time. So if my depreciation expense is $10,000, I probably should be stocking away $10,000 to ensure that I can replace it, which I realize is totally aspirational. Because, stocking away $10,000 a year sometimes is not realistic. So when you start to set up your chart of accounts and start to assign your buckets, deciding what not to do is sometimes as important as knowing what to do. And, this is what I call the Schedule F income statement. And, it's assigning all the income categories according to what the Schedule F asks of you. And it assigns all the expenses according to what the Schedule F asks you. And it's nice and neat. It's clean. It's, in alphabetical order, easy peasy, you know what you need to do. But as you can imagine where I'm going with this has issues. And challenge number one is that grants are included in revenue. So, if you have CSA revenue, you have farmers market revenue, it's like you sort of look at your income and you're like, oh, wow, look at me. I did so great in year 2. And, when you look at your expenses and you look at your expenses as a percentage of income, you're going to have a distorted view, because you're not, we sort of look at things, revenue changes every year. So how were my expenses compared to revenue? If my revenue goes up, I expect my expenses to go up too. So it looks like, in year 2, we rocked it, but well, I had a grant. So back out the grant, certainly not difficult math to back out the $25,000 grant, but it just makes it more complicated to really understand your business. The expenses, challenge number 2 is that expenses are aligned to the Schedule F and not your business reality. So for example, you have feed, which is F up here, you've got veterinary expenses down here. So your cost of animals is like not all grouped together. It's, in just disparate places on your income statement. Again, not hard math to add things up together, but as you start to set up your structure, we want to organize like with like so that we can easily see what are the direct costs of animals. There's a category, and this is something I see very often, people glom insurance together, but we've got different kinds of insurance. We have liability insurance, which is, general overhead. We have vehicle insurance, which could be argued as direct operating expense, no truck on the road, no deliveries. You have workers' comp insurance, disability insurance, which is the cost of having employees. So what's the cost of labor versus what's an overhead expense? And if we glom insurance altogether, we lose the nuance of how is our business doing. And, one of the questions that was asked is, where's the money going? How am I more profitable? Well, do you need to manage your labor better, or do you need to get better insurance quotes for your liability insurance? Where are you going to look to answer that question if, insurance is all glommed together? And likewise, with taxes, is it payroll tax, cost of having employees? Is it property tax, which is the cost of being on the land? Or is it income tax? Yay, you were profitable, you had to pay taxes. So making a decision about how to be more profitable in your business, you don't have that information because that information is all glommed together. Do folks understand why this can be a frustrating position to be in? So what I like to suggest is that as you're setting up your chart of accounts, think about what's going to help you extract the most meaning out of your income statement. So I start with, top line, which is gross sales, and, not including grants or other income, which is down here. So what did you do through the primary course of your business? Cost of goods sold, which is different, which can be different than cost of production. If you purchase things for resale, so if you have a farm store, let's say, you may be selling your own produce and meats and flowers, but you may purchase in some jams and sauces that you sell. So you're purchasing things for resale. Those are more classically the cost of goods sold. Your gross profit is revenue minus cost of goods sold. And then you have your operating expenses. What are the expenses that are associated with running your business? There's the direct operating expenses, which are, field supplies, greenhouse supplies, packaging, all the things that are directly related to growing flowers or lavender or livestock. You have labor, which is the cost of having employees. You have occupancy, the cost of being on the land. General and administrative expenses, which is the overhead that doesn't help you grow a tomato. Things like liability insurance or office supplies don't help you grow a tomato, but you need these things to run your business. Repairs and maintenance, I like to call that out separately because certainly if you were to say, Julia, repairs and maintenance is totally direct operating, I would be like, yes, it is. That is true. You need to repair your equipment and maintain your equipment to keep your business going. But because it can be such a big expense for a farm business, I encourage folks to call it out as a separate expense so you can really track it. And then finally, you have one-time expenses. And the one-time expenses, to Greg's point, if you didn't want to depreciate the greenhouse, I would put the greenhouse in one-time expenses so that I could sort of see the trends in my business clean as opposed to the things that happen once every 5 years. And then we have our operating income, which is revenue minus cost of goods sold minus expenses. And below the line, we have all those other things that go on in our business, but aren't necessarily about the operations of our business. So for example, if you get a grant, and God bless, there are tons of grants this year, fantastic. I'm glad you got a grant to support your business, but most of you are not in the business of getting grants. So, if you sort of look at your operating expenses, you don't want to be factoring in the grant because those expenses aren't associated with the grant. Interest expense, if you have a loan, you're not in the business of getting loans, you have an expense associated with it, but it's not part of your production. So I like to call it out separately. And then you have your bottom line, which is your net income, revenue minus cost of goods sold, minus operating expenses, plus or minus other income and expenses. And by organizing it this way, we can see, is your core operation profitable? If you're in the business of growing flowers or vegetables or meat, are you profitable doing that? We're isolating all of the things associated with your core operation. And is something else causing debt or profitability? And can you afford your debt and capital improvement? So we've sort of separated it out. Can I run my core business? And is something else profitability of my business? Catherine.
I have a quick question about expenses. The comment on separating out maintenance costs actually triggered a question for me. And that is, So this seems a little old school, but our mechanic is a diesel mechanic, and he gets paid partially in cash and partially in in-kind goods.
Yep.
Mostly beer, but also vegetables.
You know what? I take wine, actually, for me is good, but yes, I'm all
Right.
for that.
So, and that's a very normal thing. We do a lot of trading of services and in-kind goods. So how are we best able to track those types of payments and expenses that aren't all just cash?
So first of all, you probably want to be tracking the beer purchases that you're paying.
Oh, I do.
Yes. So under repairs and maintenance, I might have a category called in-kind payments. So every time I buy beer, it's an in-kind payment. So that's how I would do it, because it's still part of the expense. And it might be helpful to see, those in-kind payments that, if his palate starts to increase and you need to be buying, fancy artisanal beer instead of, Bud Light, or, something happens to your mechanic and now you have to start paying real cash money for it. It's helpful to see, what are you getting in kind should that situation change. So for planning purposes, being able to track that would be really helpful. And I would just call it out as in-kind.
As an expense.
In-kind R&M.
Right. Okay,
Yeah.
thanks. I was just curious.
Sure. No, I love these questions because I think these concepts make sense in principle, but then how does it work for me is, is what people want to know. Yeah. Greg?
Where would you put like investments? So like if you were making a cash investment in your business from your personal assets?
Well, that would be owner's investment in the business. So, that's like, how do we tag that transaction? Obviously, it's not revenue when you put money in, you're investing. So that's something that would show up on the balance sheet as opposed to on the income statement. John, did you have a question? Okay.
I didn't.
Okay. And Morgan and Rebecca and Maya and I can't see your faces, so I'm trusting that you all are doing well. Okay.
Julia?
Yes.
Should we take a short little bio break just in case?
Oh,
Was there anything planned like that?
There wasn't, but I'm delighted to take a bio break. If folks want to step away for a few moments and
maybe like 3 minutes or so.
Yeah, come back at 3:25.
Yeah.
Does that work for folks?
Always good to just give people a moment.
Yes, no problem. By all means. We'll be back at 3:25.
Thank you.
Sure.
There we go.
Okay, great. So as you're setting up your chart of accounts, just some suggested account names that you might want to consider. And again, what is going to be most meaningful for you as you try to evaluate the health of your business and, where can you cut back on expenses? Where's the money going? Which was one of the big questions y'all had. So if you want to know where the money is going, set up your account names in a way that makes sense to you so that you know. So, for direct operating expenses, I might do seeds and seedlings, soil amendments, greenhouse supplies. For labor, I might have, salaries and wages, payroll taxes, the insurance. There might be employee perks like meals or housing that you want to include as well. General administrative accounts might be liability insurance, the website, telephone, office supplies. And going back to rule number 2 and rule number 3, you're in charge and consistency is key. Set up your chart of accounts in a way that makes sense for you. And if you want to call seeds golden nuggets, by all means, call them golden nuggets or black gold for your compost. If that's how you think about it, that's going to help you be more consistent. And when you go back to read reports, you're going to know what things are because you're naming them by a nomenclature, which that word is too fancy for me, but I think it's the right word. Using a nomenclature that makes sense for you so that you can be consistent and get the information that you need. And, don't be bullied by your accountant or QuickBooks to set up account names that don't make sense to you. So in summary, you want to create a system that works for you. You can't manage what you don't measure. And the goal of your bookkeeping system is to allow you to measure and manage. Using a paper ledger is better than nothing, but QuickBooks really is the best option for many farmers. Know what questions you want to answer and set up your systems in a way that you can track the details that you need. And it occurs to me that we had the bio break 5 minutes before I had run out of material for today's session. But we can start to talk about QuickBooks if you all want. I have my slides already queued up and ready to go. So if folks think it would be helpful to start talking about QuickBooks, we can do that. Kara, do you have a sense?
Yeah, I say that's great. Let's go ahead and dig in. I mean, I know having used QuickBooks that there's a lot to discuss. So maybe we could leave just a few minutes. I think Haley's back on the call. She sent me everything she wanted to say.
Oh, okay.
In fact, my intro was a little short because I wasn't prepared, but maybe we can leave just a few minutes at the end to discuss that a little bit more.
Okay, great. Excellent.
Okay.
Good thing I set up my slides for next time. Hope you all had a good couple of days. Here we go.
Yes.
So we're going to talk about desktop versus online. We're going to talk about the language of QuickBooks, which I think is where people get sort of tripped up. A couple of key features, and then continuing on with the chart of accounts, we'll talk about how to set up your chart of accounts. And I'm not sure what we'll get to today, but obviously we'll cover all of this on Thursday, and I'll probably add more material then too. So I know a bunch of you, the folks of you that are already using QuickBooks are using QuickBooks Online. And for those of you who are not and still trying to decide what to do, and for those of you who are online, I think it's helpful to understand the features and benefits of both, because you may opt for one system over the other if you really kind of see them side by side. The thing that I think is perhaps the most important in terms of QuickBooks Online versus desktop is the cost. And the QuickBooks Desktop costs $300. It's a one-time expense. As long as you have your computer, you do not need to buy it again. Even if you get a new computer, you can download it again. If you save the product code and key code from the package, you can download it onto a new computer. The online version is in perpetuity forever and ever and ever. It's going to be $35 to $70 a month. And I think they may have even just increased it to $80 a month or something. I can't keep track. And that can be anywhere from $420 to $840 per year. So you can see that the online version is going to get a lot more expensive really fast. The other thing that I think is important about the desktop version versus online is how many companies do you have? And I'll give you an example. For me, I have my business, Julia Shanks Food Consulting. So I have a company for Julia Shanks Food Consulting. I have separate books all together for Julia Shanks Personal. And I take care of my parents' financials. So I have a third company for my parents. So if I were to do this in online QuickBooks, I'd need to have a separate subscription for all three entities. And, maybe I want to combine Julia Shanks Personal and Julia Shanks Business. But I really don't want to combine my parents' financials with my financials. So, being able to have a separate company, you can do that with the desktop version. On the flip side, the online version, you have the app that you can add transactions from your phone. There's the bank feed, so you can download the transactions from your bank directly into QuickBooks. It's a little bit more seamless. With the desktop version, well, you can't see me lifting up my computer, but QuickBooks lives physically on my machine, whereas, you know, the online version is on the cloud. So if you want to do anything in QuickBooks, you need to be physically right at your desk, which can be problematic. And likewise, if you have multiple people working on your bookkeeping, you know, you may have your production manager entering in expenses, you may have your bookkeeper entering in your credit card charges. So if you have multiple people in your books, you may want to be online because multiple people need to be able to access it without, you know, physically coming to your office and sitting at your desk. Another consideration is that the online version is a lot slower. And I don't know if you all feel this, you know, especially in the more rural areas, internet is not as zippy as it is in the urban areas. And because QuickBooks is in the cloud online, every transaction has to get sent up, and then every page gets reloaded every time you hit save. So it can really slow things down. And I have to say that that's frustrating point number 2 about the online for me, is how slow it is because of, you know, going up to the cloud back and forth every transaction.
Can I speak to that for a second, Julia?
Sure. Yeah.
Okay. I have online, and I had the desktop before I had online.
Yeah.
And there are trade-offs, but the ability for having other people get in there, because I do like to get help on my books quite a bit. The difference in allowing other people to, you know, log in versus how much time I might spend trying to get in FaceTime with that person makes all the difference for paying some of that extra money. And depending on your transactions, like I think I only pay like $25 a month or something like that. It's very minimal. But anyway, I know they're both good, and accountants. But
no, and you know, for me, the deal breaker is the price. Like I just can't stomach it. But for some people, the deal breaker is like, I need the bank feed and I need multiple people, and I'd rather pay the extra for that. But I guess number one, I really appreciate the, you know, having the shout out for the online version, because when I give this lecture, it's it's a little bit biased. So that's good. I appreciate that.
I know most accountants want the desktop. I mean, that's what they're definitely.
Yeah. Well, and honestly, you know, one of the other things is that QuickBooks keeps changing its language. So, you know, it calls, you know, you have the chart of accounts, but then the place where you're supposed to enter the account name, it calls category. So it's like, you know, they switch it up. It's like, here it's category, here it's account, and it's the same thing. And, you know, you changed it up on me trying to help me, but you're actually making me really confused. But to your point, I think the 2 biggest deciding factors is the accessibility, you know, whether it's with other people into your books or the accessibility from multiple locations versus the price. I think the other aspects of online versus desktop do not weigh on people as much. Do folks have questions about this? Catherine, you look like you may be talking, but you're muted.
Sorry, we've got a storm blowing in. And
no worries.
Connection.
It's okay. Frankie, did you have a question? You good? Okay. The second thing I want to talk about QuickBooks, and I started to allude to this, is, you know, QuickBookies and Accountantese are different languages. And so we need to sort of, you know, get a new lingo in our head and, you know, sort of divorce ourselves of what we know of certain words. So as an example, when we receive a payment in QuickBooks, it's a very specific function. It's not like, oh, I went to the mailbox and I got a payment. It's, I received a payment against an invoice. So it's a very specific meaning and a very specific transaction. Debits and credits, we think about it, you know, in colloquial senses, versus in QuickBooks and proper accounting, debits and credits have a very specific meaning. And then some terms are used differently in different places. So in the online version, you'll have products and services. In the desktop version, you have items. Some places it says record deposit, other places it says make deposit. You know, the example that I was just giving to Kara, you know, you have the chart of accounts, but then it calls it categories somewhere else. So, you know, we have to be nimble in how we think about things and not ask too much of QuickBooks to be too consistent. You know, just like we have different words for rain, we've got showers, we have sprinkles, we have drizzle. QuickBooks sort of likes to broaden our horizons with different words as well. So I will try to, as we go through QuickBooks next week, I'll try to be clear about, you know, using the different terms to help you understand the different things. So do other folks need to get off with the storm rolling in? It sounds like it may be impacting a lot of people. Are folks good? Okay. So some of the key benefits or the key features of QuickBooks as opposed to using Excel, and also as you sort of graduate up to the different levels of QuickBooks, the bank feed, I think, is number one. And so, and actually on the desktop version, you can also download the transactions from your bank. So it saves a step in the data entry where, you know, you have the date and you have the amount, and the payee, all you need to enter in is the category. You need to tag the transaction. So the bank feed can be a great way to save time, especially if you've got a lot of transactions. Another really key benefit of QuickBooks is that you can organize your transaction in multiple ways. You don't have to sort of pick one or the other, but you can organize your transactions by customer. You can say, I went to the Austin Farmers Market or the Dallas Farmers Market, or this restaurant or that restaurant. You can also organize your transactions by sales channel. I sold retail versus wholesale. You can organize all your transactions by enterprises, flowers or vegetables or meat or value-added products. So you can, you know, there's multiple ways that you can tag every transaction so that as you're running reports, you can slice and dice and look at things differently. It can also help you keep track of your accounts receivable. So if you're selling wholesale, which I know a lot of you are thinking about getting into, you know, if you have multiple wholesale customers, you want to keep track of who's paid you and who hasn't. And if you sell to, you know, if you're selling to a restaurant, for example, and you deliver to them twice a week, at the end of the month, they may have 10 outstanding invoices with you. So you want to be able to track which invoices have been paid and which ones have not been paid. So if there's ever a snafu, you know where to go. You can keep track of your credit card debt. So if you're charging things on your credit card, I know everybody tells me I should use my credit card because I can rack up the airline points, but I don't like my credit card because I feel like I lose track of how much money I owe. But you know, if you enter your credit card transactions into QuickBooks, you can keep track of how much you owe. And finally, also really important is taxes payable. So if do you all collect sales tax? Flowers, do the flower people collect sales tax? No? Okay. How many of you have employees? Nobody? Okay. John's almost having employees.
We pay ourselves as employees, so
okay,
set up that way.
Yeah, so if you're paying yourself as an employee, then you're withholding taxes. So let's say you make $100 a week, and obviously I hope you make more than $100 a week, but let's say you make $100 a week, $90 you're going to receive and $10 you're going to withhold to pay to the federal and the state government for, you know, Social Security, blah, 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 blah. So you need to keep track. You're not going to pay the government once a week. You need to track how much you owe them so that when you look at your checking account and say, oh, look, I've got $5,000 in the bank. Oh, except I owe my payroll taxes. Oh, except I owe the credit card debt, oh, except I owe this. So, using QuickBooks can help you track, what liabilities do you have against the cash that you have in your bank account. So getting into the chart of accounts, we started to talk about the chart of accounts earlier, and we're going to go into it into a little more depth now. We talked about garbage in, garbage out. The input are all the transactions that we're going to record in QuickBooks. So it's recording an expense, it's using your debit card or your credit card, it's depositing cash into the bank or making a loan payment, or if you make farmers market sales through Square or Venmo, you've got the cash that gets direct deposited into your bank account. You may receive grants or pay taxes. You have all of these transactions. These are the inputs that you're going to be putting into your QuickBooks. And we want to tag all of these transactions according to the chart of accounts. So, how we tag them is going to directly impact how we see the reports or the outputs. So when we set up our chart of accounts, we're going to have account types and we're going to have account names. So the account type is, where does this show up on the report? So an account type that is income, other income, fixed asset, bank, those are the account types, and that's going to say where it's going to show up on our financial statements. We also have account names, which may be farmers market sales or beef sales or, payroll expenses or seeds. And these are the account names that we're going to use to what we see on the reports. So when we look at our chart of accounts, we have the name and the type. And the name is what it is. What do we see on our reports? And the type is, where do we see it? So we talked about, organizing our income statement to extract meaning. We talked about, wanting to see, is our core operation profitable? Is something else driving profit or losses? The account types is going to help define where things show up on our income statement. So when you create your account type, you can select, you've got, all of these different account types. And if you select the account type of income, whatever you name it as, farmers market sales, farm stand sales, wholesale sales, restaurant sales, retail sales, milk sales, whatever you call it, the account type means it's going to show up here, top line revenue. Anything that of the account type of cost of goods sold, COGS, is going to show up after revenue and before your gross profit. The account type expense is going to show up after your gross profit and before your operating income. So all of the things directly related to your business, you want to have as income, cost of goods sold, or expenses. The things that are ancillary to your business, whether it's a grant, maybe you rent out an apartment above your packing shed, maybe you earn some interest, those account types would be other income or other expenses. And simply renaming the account type is going to move everything to a different place in your report. So, going backwards for a moment. So what it is how it's going to show up on the income statement or the balance sheet, and setting that account type is where it's going to show up. Does that make sense for folks? Good. Okay. Oops. So when you're setting up your chart of accounts, you can set up sub-accounts. Sometimes I call it parent categories and children categories. So you may have a parent category called direct operating expenses. And sorry, I'm going back. Let's see. So, oh shoot, can't see that here. The downside of skipping ahead is that I don't have a QuickBooks file ready to go to show you. But I will show that to you next week. You know, what does it look like when you're creating sub accounts? But you can create a parent account and then sub accounts. So, you know, when we talked earlier about, you know, keeping the direct cost of animals together, you could have a parent category called animal production, and then you could have sub accounts for feed, veterinary expense, bedding, you know, whatever, to kind of keep things grouped together. You may have inactive accounts that you don't use anymore, so you can set them as inactive. So Greg, you talked about having an enterprise for 2 years, and at the end of 2 years, it's like, oh my God, I really don't want to look at lavender anymore. I see that lavender expense every time. So you can make it inactive so that you're not, you don't have that clutter for those expenses that you don't do anymore. Rename accounts that make sense for you. You know, I mean, yes, the Schedule F tells you, you know, you want this account name or that account name, but, you know, make it work for you into categories. I mean, if bedding doesn't make sense for you, but hay and straw makes sense for you, call it hay and straw. You know, it's going to help you understand. You can merge accounts as you need to. So for example, you know, you might create an account for seeds and then you forget, and then you create a new account for seeds and seedlings, and they're basically the same. So you want to merge them so that you don't have an overly cumbersome chart of accounts. If you merge or rename things, this will apply to all previous transactions. So if you say that, you know what, I really don't want to call it bedding anymore, I want to call it hay, you can rename it in your chart of accounts, and that will apply to all the previous transactions. So you don't have to go back and edit it. It makes it really, really straightforward that way. And as you make updates to your chart of accounts, you can look at your profit and loss statement or your balance sheet and say, is this how I want it to look? And if it doesn't look the way you want it to look, you can change things. And the chart of accounts is really nimble. You can rename things, you can change account types, you know, till the cows come home. And, you know, you can't, the only thing you cannot undo is a merge. You know, if you merge 2 accounts and you're like, oh, shoot, I really didn't mean to do that. That's the only thing you can't undo. But everything else, you know, you name it this, you don't like it, you want to rename it, you want to make it an other expense instead of an expense, you can go to town, have fun. And finally, it's helpful to align revenue categories with expense categories, but use different account names. So for example, if you have, you know, beef sales, you want to have expenses associated with the beef sales. So, you know, what's the cost of feed? What's the cost of processing? What's the cost of packaging or time to go to the processing facility? All of those things, you know, so you have beef expenses. So you can really see, there's my beef revenue, there are my beef expenses. How is this enterprise? So, you know, making sure that you're naming things in a way so that you can really line up revenue and expenses. On a regular basis, you know, and I say daily-ish, you want to record expenses. If you're selling wholesale, you want to log invoices. If you receive payments, you want to note the invoices that have been paid. If you make any sales or have deposits, you want to record them. And, you know, I say daily-ish. It really depends on how many transactions you have in your business. You know, if you've got 100 transactions a week, you know, maybe you want to do this 2 to 3 times a week, so it's not really cumbersome. If you've got 10 transactions a week, you know, you can sit down for 5 minutes, bang it out. And one of the reasons why it's so important to really keep up on your bookkeeping and not wait until November, until things slow down, is that you want to be able to have a snapshot of how you're doing at any given moment. You want to be able to see, how much cash do I have in the bank? How much do my customers owe me? How much do I owe my vendors? And if you're not keeping up with your bookkeeping, you can't get that quick snapshot. You know, if you're you want to see how close are you to breaking even for the season. You know, if you don't have a bookkeeping system, you don't have that. And then, you know, further in November, you know, when you want to be relaxing and planning out the following year, you're playing catch up on your QuickBooks instead of starting to plan and move forward. So, the more you can keep up with your bookkeeping, the better it's going to help you both in terms of short-term decision making, but also making the time for long-term planning. Any questions? Kara, did you have a question? Oh, good. Okay. So I think I want to pause here. I think this is a good place to stop for today. Next time I'll have a live QuickBooks file open, ready to demonstrate specifically how to do these updates to your chart of accounts, and we'll start to walk through some of the basic transactions that we're alluding to that will help you all answer the questions that you have. And I know Hallie wanted to say a few words, but before I offer the floor to Hallie, I just wanted to ask folks, are there specific things that you want to make sure I cover in QuickBooks next week now that we've started to dip our toes in? Is there, so if there's something specific I haven't covered, or if you want to shoot me an email. Okay. Hallie, did you want to say a few words?
Yeah, for sure. Thank you so much, Julia. This was wonderful. And I'm looking forward to Thursday very much. So as I mentioned earlier, my name is Hallie Casey. I'm the supply chain program manager at Sustainable Food Center, where I really focus on bringing local farmers and regional buyers together. Through a specialty crop block grant from Texas Department of Agriculture that was originally awarded in 2019, Sustainable Food Center is partnering with food chain investors, the National Center for Appropriate Technology, and Texas A&M AgriLife to provide training and one-on-one technical assistance to farmers either currently selling wholesale or looking to scale up their wholesale marketing. So today's presentation is part of that project, and by participating today, you're also eligible for membership in the fall 2021 cohort. If you're at all interested in growing your production skill, accessing new markets, leveling up with a GAP or NOP certification, this is a really terrific opportunity. You get to work closely with some awesome experts, and you really get tailored one-on-one consulting. Some of the folks here today have been participating in this project, and we're just really excited to see it grow and see their farms grow. If you're interested in learning more or getting involved, you can either email farmers@sustainablefoodcenter.org, or you can reach out directly to me or Kara anytime. And if you don't have either of our contact info, I'll put it in the chat right now. I also wanted to mention that we will also be sending some evaluations out to gain feedback on this workshop and better understand how this event has been serving you and will serve you in the future. This data is really helpful to us as we think about putting on more events like this one in the future. We use it to decide on topics, formats, speakers, group sizes, like everything. So if you can, please complete those surveys thoroughly when they come around. With that, I want to thank Julia once again and tell everyone, I guess, oh yeah, Kara, did you have more? Please.
I just wanted to add one thing. Sorry, I got really taken off guard earlier and forgot to say everything that I was going to say. But for those of you all who are not familiar with NCAT, although I think most people are on this call, NCAT gives sustainable agriculture advice, and we have huge amounts of resources that include a great events page that you can check and look for other events like this, as well as resources such as publications and podcasts and tutorials and everything of that sort on every single ag topic you could possibly imagine in the sustainable realm. So ATTRA, ATTRA.ncat.org is that website. If you've never gone there, please visit it. And if you have any questions, you know, we're always here to provide assistance. You can email me directly. So thank you.
Cool. Thank you. And thank you all. Just as a reminder, I will send a follow-up email in about a half an hour with the recording from today's session. Also a reminder to sign up for one-on-one coaching. I got a few messages from folks that some of the topics that you want to cover may be difficult in this venue, like reconciling bank statements is going to be a difficult one to do in this format, but I'm delighted to make sure that we're covering all these things in our one-on-one coaching sessions. I'll also send out some resources for more information. I wasn't prepared for that slide today, so I needed to update that. So that was for my Thursday slide. So I want to send you all the updated information. And I will put that all in an email to you, and I'll see you all Thursday, same bat time and same bat channel. Oh wait, Kara has one more.
It
Yes.
looks like there was somebody who wanted to see the last slide before this.
Yeah, that one was not, I wasn't prepared for that presentation.
Oh, gotcha. Okay.
So that's what I'll send updated
Perfect.
in the email that's got the correct information.
Wonderful. Okay.
All right.
Thank
Cool.
you.
Thanks.
All right. Thanks, everybody.
Thanks. Bye.
Bye.
Thanks. Bye.